All right, greetings everyone. This is Eric, founder and CEO of Cubicle Investing. Definitely visit the website at cubicleinvesting.com, and there you can download my free ebook that will teach you the basics of options trading. And also, if you download the free ebook, you will be put into my email distribution where you'll start to receive my weekly newsletter called the Cubicle Weekly Reader that comes out every Monday at 10 a.m. Eastern Standard Time. And of course, we talk about the world of investing, stock market, cryptocurrency. We speak about the economy in general. And from time to time, we do give some ideas on various investments, whether they be crypto or also the stock market. So you definitely want to be a part of the Cubicle Weekly readership. All right, so today is Thursday, February the 16th. It's 12:31 p.m. Eastern Standard Time. Let me just pull up my pointer here. As you can see, it's 12:31. So I got into this trade this morning, this vertical put credit spread. And I got into it actually, what time did I get into this trade? I got into this trade looking at my spreadsheet here. I keep track of all my trades, and I hope you guys are doing the same as well, so that you can actually, because you can improve what you don't track, right? So you have to track your trade. So I got into this trade at 9:41, so 11 minutes after the market opened. And the reason being is because the market basically did exactly what I like for it to do, and it made a significant move right out of the gate. And so when the market opened this morning, as you can see here, this big red candle represents 5 minutes of price action. The market was significantly outside of the lower Bollinger Band. Let me pull up the other platform here. All right, so probably a better visual here. So the second. All right, so as you can see, when the market opened this morning, it opened down roughly 45 or 46 points. So as you can see here, nice size red candle, 5-minute candle, extremely outside of the lower Bollinger Band. Right, and so oftentimes what you'll see is when the price of the underlying in this case being the SPX, when it gets significantly outside of the Bollinger Band, it works its way back inside. And so as you can see, that's what it did. And considering that it made a significant move right out of the gate, I looked at the expected move at close yesterday for today. So the expected move at close yesterday for today, and that was 33. And so 2 times that is 66. And so just subtracting 66 from yesterday's closing price of the SPX gave me 40.81. And so essentially I decided that, okay, it's already down 46 points right out the gate. The overall environment is improving, although the CPI number that came out this week it did not meet expectation, but nevertheless, the CPI number was lower for the month of January than it was for the month of December. So we can see that inflation is constantly coming down, is constantly cooling. And again, that's a positive for the market, right? And so again, I want to be on the put side primarily, right? Because the market has an upward bias. And when things get less bad, that means that folks are looking to invest in risk assets. Risk assets are equities, right? And so folks aren't really looking at how things are how the market is doing currently. Folks are investing for how the market is going to look 8 to 12 months from now. So keep that in mind. So again, all of that said, I want to be on the put side. I am bullish to neutral, right? And so because the 2 times the expected move is 40.81, I decided that it makes a lot of sense, since the market is already down, to go below 40.81 to 40.40 and 40.30. So as you can see here, sold 5 contracts on this vertical put credit spread, took in a quick $175. As you can see here, I've made the majority of that. I'm not going to take it off. I'm just going to let it ride out. Could potentially put on another vertical put credit spread closer to the price of the underlying I normally don't do that. I normally just turn it into an iron condor. But considering if we look at the market internals, and if we look at the advanced declining indicator for the NYC, the New York Stock Exchange, actually when it opened this morning, it was over 2,000. It was a negative 2,000, so extremely bearish. But as you can see here, as the morning has progressed, or as the day has progressed, I should say, as you can see here, more stocks are starting to increase on the New York Stock Exchange versus decrease. The volume has stayed pretty consistent, though. It's not much by way of volume, but nevertheless, the amount of stocks that are going up has increased. So all of that points to, you know, being on the put side. So I may end up, depending upon, I may wait until around 2 o'clock to see where the advanced declining indicator is. If it's continuing to increase in value, I may just, you know, decide to put on another vertical put credit spread, or I may just turn this into an iron condor and go on the call side and take in additional credit, which is what I did yesterday. You know, I started with a credit of $175, and I turned it into a credit of $250 just by adding to the call side. So we'll see. All right, I'm back. It is, excuse me, it is 3:13 p.m. Eastern Standard Time. So as you can see here, I decided to turn my vertical put credit spread into an iron condor. Right, so I put this second credit spread on the call side at 2:28 p.m. 2:28 p.m. And so, considering that, you know, every sector that makes up the S&P 500 is in the red, that creates a major headwind for the S&P 500 trying to increase in value. So having, you know, understanding that, and also looking at the fact that there's not much. If we look at the amount of volume that's being traded right now, obviously the sellers are in control, and we can see here that the advanced and declining indicator for the New York Stock Exchange pretty much lost energy at the negative 500 price point. As you can see here now, it's at negative 807. So, you know, these things are pretty much a major headwind for the S&P 500 or for the SPX. So it just made sense to add some credit to the vertical put credit spread by going on the call side. And so now, as opposed to just accepting the 175 that I initially had for the vertical put credit spread, I'm now looking at walking away with $255 as a credit. So as you can see here, pretty much made the entire credit. And so definitely, so the market really hasn't done much over the last few days. It closed yesterday at 41.37, I believe. Let me look at my spreadsheet right quick. So yeah, 41.47. I'm sorry. So it closed at 41.47 yesterday. So roughly here. Then the day before that, it's 41.36. And then the day before that was 41.37 and some change, you know. So, you know, definitely not much going on in terms of volatility with the SPX, but nevertheless, still money to be made.